Hi, good morning. My name is Miranda Jones, Executive Director of the Galion-Crestline Chamber. With us today, we have Ryan Gleason, Manager of Congressional and Public Affairs with the U.S. Chamber's Great Lakes region. We are partnering with the Bucyrus Chamber on this, and we are very happy to bring some of this information to you today. And I will let Ryan take over.
Thanks, Miranda, and it's good to be with you. As Miranda said, I manage the Congressional and Public Affairs for the U.S. Chamber of Commerce for the Great Lakes region, which kind of entails from Illinois all the way through Pennsylvania and then Kentucky. So I wish I was speaking with you on a little bit better terms this morning, but just here to reassure with you that help is out there and more help is on the way. So with you, I'm going to kind of go over the updates of what the Federal CARES Act was, and then also some additional updates that are going on as well, and kind of what the U.S. Chamber is currently working on, which we're calling our path forward about how businesses start to reopen. So Miranda, if at any point you can't quite hear me clearly, feel free to just reach out and we'll try and adjust.
Okay, we'll do.
So the Federal CARES Act, just to kind of give you an understanding, it was a $2.2 trillion package, just under 10% of the GDP in our country. So the package was designed to be robust because it's an idea that helps us avoid a prolonged recession and downturn and allows us to return to regular commerce once normal commerce can begin. So we'll talk about a couple of the individual provisions. Perhaps the most important was those automatic payments that I'm sure everyone heard about. The federal government started sending them out last week. It was $1,200 per individual, $2,400 for joint returns, plus $500 per child. It began to phase out for incomes above $75,000 and $150,000 of joint income. So we know that a lot of people haven't filed their 2019 tax returns yet. That's okay. The IRS would have used your 2018 tax returns. If you didn't include a direct deposit on your return, you should go to the IRS website to see if and where your money could be deposited. So we've seen a staggering roughly 24 million unemployment claims filed in the last month. As much as we may support business, we're going to have to see a rise in unemployment almost irrespective. And that will include some fairly robust expansions in the unemployment benefits. So you remember, if you go through unemployment, you're applying for assistance, there's a lot of questions about how long you've been employed, how long you have to wait, et cetera. Those eligibility requirements have been amended as related to the coronavirus. So as I'm sure you have heard, the federal government is providing an additional $600 on top of the regular state benefit through July 31st. States like Ohio have agreed to accept this additional benefit for the residents. A lot of questions have come up about whether or not individuals will remain on unemployment given the enhanced benefit. So it's important to remember that when eligibility ends, that's when it ends when an employer or an individual can return to work. So if an employer is reopening, calling employees back, and that employee is available to work and they choose not to work, then their individual eligibility ends. So you access this as you would typically do. You go through your state unemployment office. In Ohio, you don't go to the federal government. Okay, so we'll go through some of the major provisions available to employers. We've broken them down into kind of three groups. Provisions that are available to all of the employers, provisions available to larger employers and kind of mid-sized employers, and then small businesses, self-employed, independent contractors, and nonprofits is where I spend the bulk of my time this morning, including kind of where the state of play is today. So first off, for all employers, there's a payroll tax provision for all employers who payroll taxes. So if you think about it like this, everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering both the payroll taxes for the employee and the employer side. So under this bill, an employer may choose to delay their payment of their portion of payroll taxes, which is 6.2% of Social Security wages. They can delay paying that between now and January 1st of 2021. If they choose to delay that, they have to pay 50% of the accumulated account amounts that they would have owed by December 31st of 2021, and the remaining 50% by December 31st, 2022. An important caveat, though, is that generally this is available to all employers except if you were given a loan under the Paycheck Protection Program, which I will kind of go into further detail later. There are other tax changes that are important as well, including net operating losses or NOLs. If you have a business who has an operating loss and you want to be able to use that against prior taxes paid, now operating losses are expanded for 2018, 2019, and 2020, and can generally be carried back 5 years. And this also applies to pass-throughs and sole proprietors. So if your business is primarily for corporations that have AMT credits, and you can accelerate those as well. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investments in their property, they can accelerate the recovery of that as well. So all of these provisions were centered around one idea, which was improving liquidity for employers. Because at the moment, when employers really don't have any revenue coming in, it's really hard to pay the bills. So all these provisions give employers greater access to liquidity. So just to kind of put it clearer, this isn't really about reducing overall taxes as it is timing. So again, employers have access to the cash to pay their employees today. All right, there's another provision that's available to all employers, and it's the Employee Retention Credit. This is a late add to the bill. The earlier drafts of it did not include this provision. So there really hasn't been a lot of attention paid to it. The retention credit generally applies to employers. We're talking about businesses, but also nonprofits, for example, who are fully or partially shut down as a result of the coronavirus, or have a 50% drop in their gross receipts in a quarter, and they're eligible for this until their gross receipts get back up to 80% of their prior year's amount. So think about it like this is designed to help employees who've shut down or have lost revenue, but who continue to pay their employees. So how much is the tax credit worth? It's worth 50% of wages paid by the employer up to $10,000 per employee, which is really a long way of saying it, saying that it's a $5,000 tax credit available to the employer per each employee. So there are some special rules for employers with more than 100 employees and employers with less than 100 employees. If you have less than 100 employees, the benefit only applies to employees who you are paying for not providing services. So a way to think about it is if your business is shut down, you've had a drop in revenue, your employee is not working, they're not teleworking, but you continue to pay them. You can access this credit as a benefit in recognition of the fact that you paid them. So if you have less than 100 employees, the requirement that they not be providing services does not apply. It's available to all employees who you paid during the eligible period. And the eligible period, again, is when you're shut down or when you've had a drop in revenue with gross receipts relative to the prior year. Importantly, again here, though, the Paycheck Protection Program, if you already received one of those loans, because it can be converted into a grant, unfortunately, you cannot take advantage of the Employee Retention Credit. We do understand that employers have cash flow problems today, though, and one of the things for employers who take advantage of this is we expect Treasury will be providing guidance that will allow employers to get an advance on the payment of their credit, which will help them to continue to pay their employees today. Okay, so here we're going to talk about mid-sized and larger employers, which is kind of the vaguest part of the package, but the bill includes in total $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Credit Reserve facilities. The Federal Credit facilities are now known as the Main Street New Loan Facilities. These are things that the federal government is creating to support commercial paper, money markets, and they do this as a regular course of business when we have a financial crisis, much like in 2008. So 454 of that 500 billion is directly going to businesses at large. There are special programs for the airline industry and the national credit security businesses that make up the remainder of the 454 to 500 billion. I mean, for example, last week, the airline industry just struck a deal with the Treasury Department of how they would allocate those funds. On April 9th, the Federal Reserve issued more guidance about these federal credit facilities and actually began launching them, including terms and conditions. For example, eligible borrowers are businesses with up to 10,000 employees or up to $2.5 billion in revenue from 2019. So this isn't going to be a situation where a company goes directly to the Treasury Department or Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the United States to make more loans available. There are some restrictions to go along with this in exchange but not including the benefit that includes stock buybacks by the company, so long as their loans are pending for an additional year, and there are limits on increasing executive compensation. Okay, so the next area where we'll spend the bulk of our time, as I'm sure a lot of people have heard the news, the one that's getting the most amount of attention is called the Payroll Protection Program. It was $349 billion in loans for small businesses. It's generally defined as employers with less than 500 employees, 501c3s, the self-employed, sole proprietors, and independent contractors. So a way of thinking about this is that if your business was qualified under an SBA program, that you would qualify under this program. In addition to that, some employers, some businesses who would not qualify are still eligible. So essentially, that includes independent contractors and the self-employed. It also includes restaurants and hotel folks who would otherwise be ineligible, because if you add up their locations, they have more than 500 employees. So under this bill, it says, we're going to judge you in the accommodation and the food service business. So don't automatically assume if you're not eligible for a regular SBA program that you would not be eligible for the Paycheck Protection Program. So you'd be able to borrow up to 2.5 months of your average payroll expenses, and there's a formula to calculate the average monthly payroll. Once you calculate that, it's multiplied by 2.5, except you cannot exceed $10 million loan. So, should have went back there, sorry about that. And so, where will you be able to get the loan? This is available through your local and national lenders. You don't go to the SBA for it. Lenders who are already SBA 7A lenders, if they participate in the SBA 7A program, they're automatically qualified to provide these loans. In addition, the Treasury Secretary permitted all FDIC-backed banks and credit unions to participate in this program. So there's very minimal requirements as far as underwriting these loans. There are no collaterals required. There's no personal guarantee required. And a really unique feature on these loans that they can convert into grants, depending on what you spend the money on. So the way that the bill is laid out is that it looks at 8 weeks after your expenses, what you spent money on payroll, mortgage, interest on mortgages tied to businesses, rent on businesses, and utilities. And you can also get dollar for dollar forgiveness on the amount that you borrowed, except you cannot go over the amount that you actually were allotted. So there's a number of conditions. Your loan forgiveness is reduced proportionately if you reduce the number of full-time employees that you had relative to a benchmark period. And that benchmark period is for the year before the year date prior, or the first 2 months of this year. The loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by 25%. And that's a good note about wages of over $100,000. So if you receive this loan, in your calculation of payroll expenses, if you count the first $10,000 or $100,000 that you paid an employee, but nothing beyond that, because this is really targeted at middle income earners. Employers can also avoid a reduction in forgiveness, because we know a lot of employers had to lay people off. If they bring employees back and restore their wages, generally within 30 days, and maintain those employees and maintain those wages through June 30th. So a way of thinking about this is what the government incentivizing is to give money to small businesses, money to keep paying their employees. So we're often getting asked, what if the business is shut down, or you happen to be in an area where the governor said an essential business can't open? That doesn't really matter for this purpose. What the loan looks at is, after taking a loan, were you paying your employees? The goal of lawmakers in creating this program was to provide assistance in the form of grants to small businesses and encourage those small businesses to keep paying their employees. But here's what kind of the latest is. On April 3rd, lenders began offering these loans for small businesses. On April 4th, faith-based organizations were included. On April 10th, there was additional lenders were significantly increased, including independent contractors and sole proprietors being allotted. I've not updated it as of last Wednesday, but last Wednesday, 75% of the funds had been allocated. As of Thursday, the program became exhausted. And so kind of what the state of play is that the Senate and the Treasury, Secretary Mnuchin, are trying to strike a deal on exactly how more money can be added to this program. We're excited for Congress to vote on it this week. It could be as early as Wednesday as well. So they're looking at an additional $250 billion for the program. That was at first reported, but they're looking perhaps as much as $375 billion more than the original program was allotted. This was a lot between Democrats and Republicans in Congress, and they kind of struck upon this sort of 375 as opposed to 250. But additionally, on top of that, there's going to be money allocated more than likely for healthcare and general testing, and then perhaps for local governments and state government as well. So we're expecting for sure that this program will be refunded this week. The question is just how much it will be. So in the event that you weren't able to take advantage of this program, that's not to suggest that you wouldn't be able to, and perhaps less than a couple of days from now. So keep that in mind as we kind of see the news develop this week. So as I had said, if you got a loan as a part of this program, or perhaps it's funded through again this week, the Chamber has released a 4-step guide to help you prepare for applying for one of these loans. It goes through in detail who is eligible, how you calculate your average monthly payroll cost, what your lender might be looking for when you show up to apply for a loan. And in addition, how your loan forgiveness can be calculated. It's been such an effective guide that the SBA is actually using it in their social media posts. And I've heard personal success stories from businesses or sole proprietors or independent contractors that have used this guide as well. Okay, so here is another provision that benefits small businesses and self-employed independent contractors and nonprofits. And it's the SBA Economic Injury Disaster Loans, also known as EIDL loans, EIDL. So, and you've probably heard about them before because they've been around for a long time. You know, if, for example, you've been affected by a tornado or another natural disaster, you might have applied for and received an EIDL loan. So who is eligible? It's eligible for small businesses, including faith-based, and there's no restrictions here on the type of nonprofit. It's any entity that has fewer than 500 employees. And again, here it's eligible for sole proprietors and independent contractors. This is an actual loan that in general converts into a grant. The way that the bill was written is that you could borrow up to $2 million in working capital that's repaid over 30 years. And you can kind of see the low interest rates there, though. However, as time has gone on, there has been a robust amount of businesses, particularly small businesses, that applied for this loan, where they were originally thinking the cap, instead of $2 million, was closer to $15,000. And then I'll kind of get into the updates of this as well. But the way that the bill is laid out is that if you take this loan, payments are deferred up to a year. So you don't have to immediately start paying on this loan should you have received it. They made it easier for businesses to apply. So your loan is going to be based on your credit scores. You don't have to immediately produce tax returns. And you can borrow, or you can get up to $200,000. The loan was written out with personal guarantee. There's no collateral required for $25,000 or less. Beyond that, there's a general security interest, or sometimes it's secured through real estate, but they're trying to move away from that in this particular instance. So there's an important feature that's brand new with the CARES Act. If you're applying for the EIDL loan, you're also able to request an emergency grant for up to $10,000, which is not, you do not have to repay. The $10,000 grant, there's guidelines for what you may use the grant for, but there is no requirement. So hypothetically, let's say that you pay for the loan, or you apply for the loan, you receive the grant, you're denied the loan, you would not have to pay for, you would not have to repay that emergency grant, essentially an emergency grant for small businesses. So there's important interactions with the Paycheck Protection Program that we just talked about. For example, if you ended up with both, you would have generally ended up with both because you've already gotten an EIDL loan, and now that the Paycheck protection laws were set up for those that are applying, you can't get double forgiveness on the Paycheck Protection programs with the grant that would come off the Paycheck Protection Program. There's also some requirements with respect to the Paycheck Protection loans that you cannot double dip. So for example, in other words, you cannot take out both loans to pay the same bills. So if you're thinking about doing both of these, you're going to want to think about those restrictions. So don't assume that you can do all these programs and just stack them up. What they've done is make the Paycheck Protection Program most favorable and then tacked on other programs that don't avail themselves of the Paycheck Protection loan, and that includes this EIDL loan. So you don't apply for this one and you're going to your local bank. You go to the SBA website at sba.gov. This is one where 501c6s can apply for as well. Also to know that chambers can also receive the employee retention credit, but they have to be substantially shut down or have a reduction in revenue relative to the prior year's period. And so you want to think about that when you do your taxes. Okay, so with respect to small businesses, there are some revisions that a lot of questions have come about that don't come from the CARES Act. They come from the Families First Act, which was the prior bill, often kind of called the Phase 2 bill. So what the Phase 2 bill included was a requirement that employers with less than 500 employees provide paid sick leave, 10 days of paid sick leave to their employees if it's related to the coronavirus. So sick leave is taken when you're ill, when you're quarantined, when you take care of a family member who's quarantined, or you're taking care of a child because of school or daycare closures, as we've seen. So leave is paid at your regular rate, but for a maximum of $511 per day, unless you're taking care of a family member. Then it's 2/3 regular rate with a maximum of $200 per day. Importantly, what the federal government will do is that they'll reimburse the employer 100% of these costs of the daily maximum that you can pay your employees. This is a refundable tax credit, and that businesses, we're understanding, have liquidity problems as well. The Treasury Department is taking steps to allow businesses to request an advance on their refundable credit so that you have the resources to pay employees who are taking the sick leave. This is in addition to what the employer already provides, including what is provided pursuant to state and local law. So there's a lot of talk about businesses with less than 50 employees being exempt. The law provides that an employer may be exempt, but they can only be exempt with respect to leave that's tied to taking care of a child whose core daycare is closed, or to the extent if providing leave threatens the viability of the business. So if you think this applies to you, you should go to the Department of Labor's guidelines that they're posting on their website at labor.gov, where they explain it a little further. Finally, paid sick leave is generally not available to an employee where they can telework. That only applies if the employee is taking care of, for example, a child, and they can telework by staggering or changing their hours. Okay, kind of in the last portion here. So the bill will also include paid family leave, or FMLA, for those not familiar. It's Family Medical Leave Act. So it's a law that generally allows for 12 weeks of unpaid leave. But what the Phase 2 bill did say is that employers with less than 500 employees, they are required to provide up to 10 weeks of paid family leave if the employees take care of a child due to school or daycare closure. caused by the coronavirus. That is the only reason for extended leave. So when you think about the interaction between this and sick leave, an employee would have 10 days of sick leave first, and then would be eligible for 10 weeks of paid leave. Here again, it's paid at 2/3 the regular rate of a maximum of $200 per day, $10,000 in the aggregate. In addition, it's already what you provide under state and local law again. So this is also reimbursed in the same way by the federal government. There are exceptions for employers with less than 50 employees, same as paid sick leave, and it doesn't apply to an employee who can telework. So there's a couple of resources that we have, including uschamber.com, which we have a lot of bill summaries, and then in particular with CO is a chamber program that focuses on small businesses that has survival tips and guides and other things available for small businesses. For the PPP guide, again there, it's at uschamber.com/SB loans. And then we have a small business initiative called the Save Small Business Fund. If you go to savesmallbusiness.com today, you can see if you are a small employer with 3 to 20 employees, we are having a $5,000 grant available for those, as much as our funds could allot for. It's kind of based on where economically disabled areas are, meaning the bottom 80% of zip code. So if you go to savesmallbusiness.com, you can see if your company would be eligible for this sort of grant. It goes live today at 4 p.m. Eastern. And then lastly, kind of what we sent out last week was we launched a new program called A Path Forward. So essentially how Americans can return to work. And we kind of broke it down just for folks to understand what it's going to take for business to return back to work. And so there's essential services and resources that are necessary to returning to work that we'll have to consider, such as general screening, COVID-19 testing, personal protection equipment, childcare, and transportation are going to be critical. But there's also a resolution to regulatory and liability issues such as health privacy, discrimination claims, safe workplace requirements, support for independent contractors, employment practices, exposure liability, product liability, medical liability, et cetera. And then lastly, we're going to have to support small businesses and individuals during a phased reopening, including businesses dependent on high density gatherings or travel, and individuals that are delayed in returning to work. So obviously there's a lot going on, and Miranda, if you caught any of the questions, I'd be happy to take any of them.
All right, does anyone have any questions right now for Ryan? I know that the question that we had received in an email prior to this involved an employee who was already out on FMLA and was supposed to come back. And they were discussing of using the FMLA extension for that. So I don't know if maybe you can provide a little more insight for that. And then if anybody has any questions, please go ahead and ask and we'll get to them.
So again, here in this sense, if an employee is on FMLA, they have 10 weeks or they're eligible to it, but it has to be related to the coronavirus. So for example, they have a terrible headache. This wouldn't apply in that sense. They have to be actually physically diagnosed with the coronavirus, or they have to be taking care of a family member that also has it as well. So in that case, they would have to return. They wouldn't be able to use their leave in that respect.
Okay, we still don't have any questions, which I guess is good, but I just wanted to ask for a chamber's point of view,
Sure.
getting these small businesses, the services and the request, not the services, but there's the support they need, and someone that's an owner operator, for example. We have a lot of small businesses in our town that they they don't have anybody on payroll, it's them. They own the business, they run the business, or this. What is available for those type of people?
So for individuals, those would be considered sole proprietors if they don't have any employees. And the Paycheck Protection Program, while the program is technically on hold, they haven't canceled the program. What we're trying to do is advocate for more and more money, up to perhaps $375 billion worth in the package. But then also as it relates to C6s, we encourage chambers to go to savesmallbusiness.com. They could be eligible for this grant, but then also what's kind of a phase 4 bill. When Congress actually returns to Washington the first week of May, they're going to begin working on a phase 4 bill. And a lot of questions are, what does this look like? It's kind of like throwing pasta on the wall, and you don't really know what's going to stick. A lot of folks are saying that perhaps transportation and infrastructure was the big issue, but now we're not hearing that so much being the case. But what we're fighting for at the chamber is to make sure that C6s are eligible for the Paycheck Protection Program. We at first rolled out a sign-on for chambers. Within 2 hours, we had 1,400 chambers sign on to try and get them on the phase 3 bill. That hasn't been the case, but we're attending webinars with members of Congress, senators, urging them to get C6s on it, and we're feeling like it's getting a lot of traction as well.
Okay, we do have some questions that came in, Ryan. So the first question involves the Save Small Business that launches today. For the
Sure.
3 employee stipulations, what about the owner? Do they count as an employee?
Good question. The employer does, or the owner does count as an employee, yes.
Okay, good. Barb, does that, I'm hoping that helps you. So the employee does count. Next up is if a business has received the PPP loan, are they eligible to get the tax credits via the Family First Act? Like the 10 weeks of paid if they're caring for a child, or the 2 weeks of sick, are they still eligible for that if they have a PPP?
Both, yes, they are both separate. Mm-hmm.
Okay, so it's 2 different acts, so you can apply for both, right?
Correct.
Okay. The next question comes in from Michelle. It says, we are not at a point where we can bring all our employees back due to the decrease in our workload. So we are not applying for the PPP loan. What other options would you recommend?
I would still recommend applying for the PPP. I also don't want folks to think that my word is the gospel here, just because each business has their own individual critiques and issues going on. But I would recommend doing the Paycheck Protection Program, because what this is targeted at is, even if you can't bring back your employees, what the goal is that you still pay those employees, and that you also have funds as well to pay for utility and rent, et cetera, as mentioned, because that can be converted into a grant where you would not have to pay it back.
Okay. If you guys do have questions, there's the panel on the bottom with the Q&A, so you can always type those in. I know we've had a couple, but I don't know if we have any more. I just wanted to add, so Small Business Week is that week of May 4th. What should we anticipate? I mean, I don't want to like count on things reopening, but as far as still supporting small business, just encouraged to do what we're doing now.
Well, I think, Ohio is in really great shape, at least as it relates to the rest of the country. Governor DeWine was outside of California and New York. He was one of the first governors to really step forth for kind of this, for the coronavirus, in the sense of shutting things down. And he's already stipulated that May 1st when he targets for employers to begin to reopen. But to know, employers won't be picking up where they left off. As I said before, we kind of described, and if you type in the path forward by U.S. Chamber, you can see what it's going to take for businesses to reopen. But I would encourage chambers. They've done an excellent job in promoting them via social media, getting a lot of traction. But we'll definitely, at the U.S. Chamber, be encouraging to help support small businesses in any way possible, whether it includes delivery services or stuff of that nature.
All right. We had a follow-up question to the one we asked before about the PPP loan and coming back kind of to a slower workload. So she said, would we only request the amount that we would need to retain the current staff for 8 weeks along with the rent and utilities, or do you recommend them to request the amount from when they were fully staffed?
So it's the amount from when you're fully staffed, and that again is a key caveat. It's either the first 2 months of this year, whether you're fully staffed, and that includes full-time and part-time employees. It does not include independent contractors if that was the case. Encourage that independent contractors apply their own. So the first 2 months of this year or 1 year prior to the year of you applying for the loan. So let's say you apply for the loan this Friday, then it would be 1 year ago from this Friday.
Okay. And what else should we be doing to encourage some of our smaller businesses who are hesitant to apply for any of these loans? What would you say to them to kind of give them that push to apply for any of these?
Well, it's that once the Paycheck Protection Program is refunded, again, the key thing is that the loans convert into grants. So essentially, if you are paying your employees and you're essentially paying yourself or whatever your compensation or salary or wages would be, that does not have to be refunded. And so what this is doing is helping keep people off the unemployment payroll, which essentially saves money for the country, the government spending money on employment, roughly $1 for every dollar saved for $1 spent. And that's the biggest benefit, just in the sense that it turns into a grant.
Okay. Are there any other questions for Ryan today? All right. So Save the Small Business. It is not on the website currently. Is that correct?
SaveSmallBusiness.com is up and available. So I would encourage folks to go to SaveSmallBusiness.com. All that is required is it goes by zip code. We understand that obviously the coronavirus is affecting everyone during this state of play, but we're looking at particularly the zip codes that are kind of economically distressed by a third-party calculation. And it requires W-9. It roughly takes 10 minutes to do. So if you think this could apply to you and you're a small business with 3 to 20 employees, we encourage you to check out and apply for the loan as well.
And for those on here, just a piece of advice, they did update the W-9 recently. So you may, I'm sure that they're going to want the most recent version of that W-9. So before 4 o'clock today, if you plan on applying, you should probably update your W-9. I don't have anything else. Any other questions? If not, I think we'll conclude with this. With the small business, Save Small Business things, in case people didn't know, Crawford County is considered a distressed county. So I just had someone ask me that on my cell phone. So we are a distressed county, so our zip code should apply. Brian, any last words for us?
Thank you. Well, I mean, so just, I hope that the next time that we're able to talk, it's about really going into detail what reopening business looks like, as obviously Ohio seems to be full steam ahead and kind of ahead of the curve in the sense of opening up again. And hopefully a lot of lessons that we can learn from what that looks like in Ohio. And so again, the key thing to pay attention to for this week is how much funding for the Phase 3 bill could be re-added this week. We're hoping as much as $375 billion, double the amount or more than the original amount of the original Paycheck Protection Loan, hopefully more for EIDL, and then kind of what a Phase 4 looks like as well as we hopefully return back to work. But Miranda, I appreciate being on this morning and all those that attended as well.
Awesome, thank you. Enjoy the rest of your day. We will follow up with another webinar when we get the word from the governor on how businesses are planning to reopen. So.
Great, thank you so much. Take care.
Thank you.